Class 12 Accountancy Numerical Problem Solutions, presented by NCERT.com. In this video, we are going to provide Accounting for Partnership Basic Concepts, Guarantee of Profit to the Partners Solutions, Problem 35 Solution. The problem statement is as follows. Ram, Mohan and Sohan are partners with capitals of 5 lakh rupees, 2,50,000 rupees and 2 lakh rupees respectively. After providing interest on capital at the rate of 10% per annum, the profits are divisible as follows. Ram 1 by 2, Mohan 1 by 3 and Sohan 1 by 6. Ram and Mohan have guaranteed that Sohan's share in the profit shall not be less than 25,000 rupees in any year. The net profit for the year ended March 31st, 2000 XA is 2 lakh rupees before charging interest on capital. You are required to show distribution of profit by preparing profit and loss appropriation account. So, as per the problem, we have to show the distribution of profits by preparing the profit and loss appropriation account. Now, it's given in the problem that the capitals provided by partners are 5 lakh rupees, 2,50,000 rupees and 2 lakh rupees. See, we have to post these capitals in the capital account, but the preparation of the capital account is not in the scope of this problem. So, let's not consider the posting of the capitals. Now, it is also given that the interest on the capital should be paid at the rate of 10% per annum. So, let's first proceed to calculate the interest on the capital. Let's first write the heading Interest on Capital to indicate that the upcoming calculation is related to the calculation of the interest on the capital. Now, the interest on partner Ram's capital is his capital amount of 5 lakh rupees multiplied with the rate of interest on capital 10 upon 100. Let us cancel a 0 in 100 for the 0 in 10. Let us cancel the other 0 in 100 for the 0 in 5 lakh rupees. The result of this calculation is 50,000 rupees. This is the interest on partner Ram's capital. Now, the interest on partner Mohan's capital is his capital amount of 2,50,000 rupees multiplied with the rate of interest on capital 10 upon 100. Let us cancel a 0 in 100 for the 0 in 10. Let us cancel the other 0 in 100 for the 0 in 2,50,000 rupees. The result of this calculation is 25,000 rupees. This is the interest on partner Mohan's capital. Now, the interest on partner Sohan's capital is his capital amount of 2 lakh rupees multiplied with the rate of interest on capital 10 upon 100. Let us cancel a 0 in 100 for the 0 in 10. Let us cancel the other 0 in 100 for the 0 in 2 lakh rupees. The result of this calculation is 20,000 rupees. This is the interest on partner Sohan's capital. Now, this interest on capital for all the partners should be transferred to the partners. This is done by debiting the interest on capital account and creating the partner's capital account for each partner individually. Now, the preparation of any of these accounts is not in the scope of our problem. So, let's leave out this. But we will consider them to calculate the profit that should be distributed among the partners. Now, if you carefully analyze the problem, apart from interest on capital, there is nothing else. So, we can now proceed to the preparation of the profit and loss appropriation account. Now, it is given in the problem that the net profit for this year before charging the interest on capital is 2 lakh rupees. Now, we know that the net profit is nothing but a credit balance in the profit and loss account. For distributing this net profit, we prepare the profit and loss appropriation account. So, we need to transfer this net profit on the credit side of the profit and loss appropriation account. Also, as we are transferring this net profit from the profit and loss account, we need to debit the profit and loss account. Now, the preparation of the profit and loss account is not in the scope of this problem. So, let us leave out the profit and loss account related debit entry and let us directly post the profit and loss appropriation account related credit entry into the profit and loss appropriation account. But first, let us prepare the format of the profit and loss appropriation account as it is not yet prepared. Let us first write the title as profit and loss appropriation account. Let us then write the headers DR and CR to designate the debit and credit sides respectively. Let us now have the individual columns for particulars and amount in rupees on the debit side. Let's have the same columns on the credit side also. Let's then write by profit and loss account into the particulars column on the credit side. This indicates that the net profit is transferred from the profit and loss account to the profit and loss appropriation account. Let's then write the transferred net profit amount of 2 lakh rupees into the amount column. With that, we have completed the credit entry related to the transfer of the net profit amount from the profit and loss account into the profit and loss appropriation account. Our next step would be to transfer the interest on capital from the interest on capital account to the profit and loss appropriation account. See, when we have posted the interest on capital into the interest on capital account, we posted it on the debit side of the interest on capital account. So, when we transfer this amount from the interest on capital account to the profit and loss appropriation account, we should transfer it on the debit side of the profit and loss appropriation account. Also, as we are transferring the interest on capital out of the interest on capital account, we should create the interest on capital account. Now, as we have already discussed, the preparation of the interest on capital account is not in the scope of this problem. So, let us leave out the interest on capital account related credit entry and let's directly post the profit and loss appropriation account related debit entry into the profit and loss appropriation account. Let's first write to interest on capital account on the debit side in the particulars column. Let's then write the interest on partner Ram's capital as 50,000 rupees. Let's then write the interest on partner Mohan's capital as 25,000 rupees. Let's then write the interest on partner Sohan's capital as 20,000 rupees. Now the total of all these interests on capital is 95,000 rupees. Let's write this amount in the amount column. With that, we have completed the posting of the interest on capital transfer from the interest on capital account to the profit and loss appropriation account. Now, as there is no other appropriation to be considered, let's calculate the profit amount that should be distributed among the partners. Now, the total on the debit side of the profit and loss appropriation account is 95,000 rupees. Similarly, the total on the credit side of the profit and loss appropriation account is 2 lakh rupees. Now, from the total on the credit side, which is 2 lakh rupees, if we subtract the total on the debit side, which is 95,000 rupees, we get 1,05,000 rupees. This is the surplus on the credit side, and this is the amount of profit that should be distributed among the partners. But in what ratio? Now, it's clearly specified in the problem that this profit should be distributed in the following fractions: Ram 1/2, Mohan 1/3, and Sohan 1/6. Let's now calculate the ratio of these fractions. See, we can directly find the profit share of the partners using these fractions. But it becomes easier and more clearer if we find the profit sharing ratio. So, the profit sharing ratio of these partners will be 1/2 is to 1/3 is to 1/6. Let's multiply all the numerators with 6. Why 6? Because 6 is the LCM of 2, 3 and 6. Also, as you know, when we multiply any ratio with a number, its value will not change. So, this becomes 6/2 is to 6/3 is to 6/6. Let's cancel the first fraction with 2. 2 ones are, 2 threes are. Let's cancel the second fraction with 3. 3 ones are, 3 twos are. Let's cancel the third fraction with 6. 6 ones are, 6 ones are. Now, the resulting value of this calculation is 3:2:1. This is the ratio in which the profits should be distributed among the partners. Let's now calculate the share of the net profit for each partner as per this ratio. Before we proceed with the calculation, there is one thing worth noticing here. It is given that the partner Sohan's share in the profit should not be less than 25,000 rupees. It can be more than 25,000 rupees, but it should not be less than 25,000 rupees. It is also given that Sohan's share in profit is guaranteed by the other two partners, Ram and Mohan. So, in the working notes section, let's first write the header profit share as per the profit sharing ratio. This indicates that the upcoming calculation is related to the sharing of the profit as per the profit sharing ratio. Now, the profit share of the partner Ram is equal to the total distributable net profit amount of 1,05,000 rupees multiplied with his profit sharing ratio 3/6. Cancelling with 6, 6 ones are, 6 17,500 are. Now, if we multiply the remaining 17,500 rupees and 3, we get 52,500 rupees. This is the share of profit for the partner Ram. Now, the profit share of the partner Mohan is equal to the total distributable net profit amount of 1,05,000 rupees multiplied with his profit sharing ratio 2 upon 6. Cancelling with 6, 6 ones are 6, 17,500 are. Now, if we multiply the remaining 17,500 rupees and 2, we get 35,000 rupees. This is the share of profit for the partner Mohan. Now, the profit share of the partner Sohan is equal to the total distributable net profit amount of 1,05,000 rupees multiplied with his profit sharing ratio 1 upon 6. Cancelling with 6, 6 ones are 6, 17,500 are. The resulting value of this calculation is 17,500 rupees. This is the share of profit for the partner Sohan. But it is given in the problem that the partner Sohan should get a guaranteed profit amount of 25,000 rupees. But as per the profit sharing ratio, we are getting his share of profit as 17,500 rupees. Now, this 17,500 rupees is less than 25,000 rupees, right? So, we need to find the difference and adjust it from the share of profit of other partners. In other words, we will reduce the other partner's share of profit and adjust that amount to Sohan's share of profit so that Sohan would get the guaranteed profit amount of 25,000 rupees. By the way, we call this difference in the profit share amount as deficiency. So, the deficiency of Sohan's profit share is his guaranteed profit amount of 25,000 rupees minus his calculated profit share as per the profit sharing ratio, which is 17,500 rupees. Subtracting, we get 7,500 rupees. So, this deficiency should be adjusted from other partners' profit amount. The question is, by how much we should adjust from each partner? It should be in the proportion to their profit sharing ratio. In other words, in the ratio of 3:2. So, partners Ram and Mohan should contribute to these 7,500 rupees in the ratio of 3:2. Now, the contribution by the partner Ram is equal to the deficiency amount of 7,500 rupees multiplied with his deficiency sharing ratio of 3 upon 5. Note here that this denominator is 3 plus 2 equal to 5. It's not 6. Note this point. Now, cancelling with 5, 5 ones are 5, 1,500 are. Now, if we multiply the remaining 1,500 rupees and 3, we get 4,500 rupees. This is the contribution by the partner Ram to the deficiency in the partner Sohan's profit amount. Now, the contribution by the partner Mohan is equal to the deficiency amount of 7,500 rupees multiplied with his deficiency sharing ratio of 2 upon 5. Now, cancelling with 5, 5 ones are 5, 1,500 are. Now, if we multiply the remaining 1,500 rupees and 2, we get 3,000 rupees. This is the contribution by the partner Mohan to the deficiency in the partner Sohan's profit amount. Considering these contributions, let us now find how much is the actual profit share of each of the partners. Now, the actual profit share of the partner Ram is equal to his share of profit as per the profit sharing ratio, which is 52,500 rupees minus his contribution to the partner Sohan's profit share deficiency, which is equal to 4,500 rupees. Subtracting, we get 48,000 rupees. Now, the actual profit share of the partner Mohan is equal to his share of profit as per the profit sharing ratio, which is 35,000 rupees, minus his contribution to the partner Sohan's profit share deficiency, which is equal to 3,000 rupees. Subtracting, we get 32,000 rupees. And finally, the share of profit of the partner Sohan will be equal to his guaranteed profit amount of 25,000 rupees. Now, for posting these profits, we should debit the profit and loss appropriation account and create the partner's capital account individually for each partner. Now, the preparation of the partner's capital account is not in the scope of this problem. So, let's leave out the partner's capital account related credit entry and let's directly post the profit and loss appropriation account related debit entry into the profit and loss appropriation account. Let's first write the subheader profit transfer in the particulars column on the debit side. Let's then write to Ram's capital account. Let's then write partner Ram's share in profit calculated as per the profit sharing ratio, which is 52,500 rupees. From this, Let us lessen his contribution to the partner Sohan's profit share deficiency from guaranteed amount. This is 4,500 rupees. Now from 52,500 rupees, if we subtract 4,500 rupees, we get 48,000 rupees. Let us write this amount in the amount column. Let us then write to Mohan's capital account. Let us then write partner Mohan's share in profit calculated as per the profit sharing ratio, which is 35,000 rupees. From this, let us lessen his contribution to the partner Sohan's profit share deficiency from guaranteed amount. This is 3,000 rupees. Now from 35,000 rupees, if we subtract 3,000 rupees, we get 32,000 rupees. Let us write this amount in the amount column. Let us then write to Sohan's capital account. Let us then write partner Sohan's share in profit calculated as per the profit sharing ratio, which is 17,500 rupees. To this, let us add the deficiencies received from other partners. Now, the contribution to this deficiency by the partner Ram is 4,500 rupees. The contribution to this deficiency by the partner Mohan is 3,000 rupees. Now, to 17,500 rupees, if we add 4,500 rupees and 3,000 rupees, we get 25,000 rupees. Let's write this in the amount column. Now, the total on the debit side of profit and loss appropriation account is 2 lakh rupees. Similarly, the total on the credit side of profit and loss appropriation account is also 2 lakh rupees. So, the profit and loss appropriation account is balanced. With that, we have come to the end of the solution to this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.